Can you claim both HRA and home loan benefits together? Can you claim HRA benefits if you live with your parents or relatives? And what options do you have if your employer does not provide HRA? Hello people, I am Suraj Deo and welcome back to Deo Talks. In today's video, we will cover some important questions related to House Rent Allowance or HRA. Okay, question number 1. Can you claim both HRA and home loan benefits together? For a salaried person who has limited tax saving options, the tax benefits available through HRA and home loan repayment becomes crucial as it helps in substantial tax savings. So let's explore 3 cases to better understand this question. Case 1. You have a house in one city but living on rent in a different city. Today, many individuals own a house in one city while living on rent in another. Can such a person claim income tax benefits for both HRA and home loan repayment? The answer is yes. If you are living on rent in your city of job and own a house in another city, then you can claim tax benefits for both HRA for rented property as well as interest on housing loan for self-occupied property of another city. Please note that you can claim a deduction of up to Rs 2 lakhs under Section 24B for the interest portion. Additionally, you can claim up to Rs 1.5 lakhs towards principal repayment of the home loan under Section 80C, resulting in a total deduction of up to Rs 3.5 lakhs. Even if the owned house is vacant or occupied by other family members, still it will be treated as a self-occupied property. Case 2. You have your own house but living on rent in the same city. Every metro city is getting bigger and for many people it may take hours for a one-way commute to the workplace. Many individuals prefer to live closer to work to reduce commute times. So can you claim both deductions while living on rent as well as owning a house in the same city? So in special circumstances, if you can prove that your own property is quite far from the workplace, and therefore you are compelled to choose a nearby rented accommodation, then you might qualify for both HRA tax exemption and home loan benefits. However, not every reason in this case qualifies for a deduction. Just desiring for a shorter commute will not be sufficient. The rules here are a bit tricky. For instance, if you cannot live on your property and choose to rent a place just to be near to your children's school, you might not qualify for the benefit. Case 3. If you put on rent your own house and also live on rent in the same city. Apart from workplace proximity, there could be various other valid reasons for not living in your own house, such as if it's too small for the family. Can you claim both the deduction in this case? Yes, but this is only possible if you put your property on rent and not if it is self-occupied. Also, if you choose to let out your property and live in the same city or any other city due to reasons like your children's school or your job location, you are eligible for HRA and home loan repayment benefits. However, the reason for living on rent in the same city needs to be convincing. The genuine need to rent out your house and live in another rented property might need to be justified to the income tax department. There is a chance of disallowance since no specific rules are given in the Act. In this third case, you may have to forego the deduction related to principal repayment under Section 80C. However, you would still be eligible for a deduction of up to Rs 2 lakhs on the interest payment of your home loan. For many people, this arrangement may work out well because they may not need the benefit of principal repayment at all. This is because the limit of Rs 1.5 lakhs under Section 80C may already be exhausted through other options like EPF contribution, ELSS, PPF, NSC and so on. One small request before we move further. If you have found this information useful so far, please like this video and subscribe to our community. Your support means a lot. Question number 2. Can you claim HRA benefits if you live with your parents or relatives? Yes, it's possible to claim. You just have to pay them the rent and they should include it in their income when filing their income tax return. Additionally, you must meet these HRA eligibility criteria as per tax law. Number 1, you cannot be the owner of the house property for which you are claiming HRA. Number 2, you have actually paid the house rent. And number 3, you should be a salaried employee receiving HRA from your employer. Make sure to keep your bank records of rent payments to your parents and keep copies of rent receipts and rental agreement as proof. Any rent paid to your parents become taxable income for them, which must be declared in their tax returns under income from house property. They can adjust the payment of property taxes and can claim a standard deduction of 30% on this rental income. Also remember that the HRA benefit is available only for the months during which you pay rent, not for the entire year. For example, if you pay rent only for 7 months in a year, you get HRA benefits for those 7 months and not for the entire year. Question number 3. What options do you have if your employer doesn't provide HRA? If you are not getting HRA from your company or employer, but you are living in a rented house and paying rent, you can still claim deductions under another section called 80GG. The maximum deduction allowed is Rs 60,000 per year, which means Rs 5,000 per month. Here are the conditions for claiming a deduction under section 80GG. Number 1. Employment status. You must be either a salaried person or self-employed, having a business or profession, to be eligible for deduction under section 80GG. Number 2. No HRA received. You should not have received any HRA during the year for which you are claiming deduction under section 80GG. This condition is essential because HRA already offers tax benefits, and so section 80GG is for individuals who do not receive HRA as part of their CTC. Number 3. No ownership of residential property. That means you, your spouse, your minor child, or the HUF you are a part of should not own any residential property where you currently live or work. This condition is to ensure that the deduction is available only to individuals who do not have a self-owned property at their current location. Here are some other questions people generally ask related to 80GG. Can you claim 80GG benefits when you are living with your parents? Certainly, you can claim section 80GG benefits when you are living with your parents or the property is in your parents' name, provided you are paying rent for this. Also ensure you have a rental agreement with your parents. Now let's see the eligible amount of deductions under section 80GG. The lowest amount from these three rules will be considered as a deduction under this section. Number 1. Rs 5,000 per month or Rs 60,000 per year. Number 2. 25% of the adjusted total income. And number 3. Actual rent minus 10% of adjusted total income. I will explain the meaning of adjusted total income in the comments. Remember, you will also need to file Form 10BA, which requires details of your rent payment. Form 10BA is compulsory when claiming benefits under section 80GG. It serves as a declaration that you have rented a house during the rental period and have no other residence. That's all for now. Please feel free to leave any question or comments below. Thanks a lot for your time, and let's take care of this beautiful world. I'll see you next. And smile. Always smile.